Hello everyone, welcome to the Ichimoku.co and ForexTrading.tv daily analysis for gold for the trading day ending Tuesday, November 12th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading, we had a small body candle at the end of a decent downtrend, and following a very large black body candle, suggesting that there was potential for a change of trend. But we didn't see that occur. We've seen the sellers come back into this market fairly strongly, extending the size of the black body and suggesting that the sellers have found some solid downside momentum in net terms. It means that they've made a substantial amount of net bearish progress on the day between the open and the close. Interestingly, the sellers have interacted with the 1266 level of support, and we have seen a bearish close just down below that level. So with the sellers closing with control of this market and finding some strong commitment to taking this market lower, it does suggest that there is potential for this area to hold as support for this market and for the buyers to come back in. And as we're watching this current candle as it's developing, have a white body, but that doesn't really mean anything at the moment. We do need to wait until we have some more evidence. But we did see some small rejection as the market tested roughly down to about the 1260 level, and that was a previous level of some strong buying coming in, and certainly down to around the 1250 level we have very, very strong support. So if this trend does continue within a zone here between the 1266 level and 1250, it's very likely that we will see buyers come back into the market. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market is trending down, and here we've seen the market trade in a bearish manner down below the 100% level. This suggests that there is a real possibility of this market testing down to the 161.8% level at 1234, and that would mean the market trading through that zone of support. So with the sellers being so strongly in control of this market for this close of trading, there is a real possibility of that occurring. In terms of the Fibonacci retracement of the prior minor first time frame uptrend that we saw in the market, bearish activity down below the 261.8% level, suggesting that the market may trade to the 423.6% level, which is at 1237, and beyond that zone of potentially strong support. Now, in terms of Ichimoku, obviously a bearish market in all three timeframes, with the market trading down below the cloud. So we have a bearish bias in the long-term time frame. We have a bearish bias in the medium-term time frame, with the market trading down below the Kijun-sen, the pink line. And interestingly, that Kijun-sen is still pointing flat, so there is a possibility of price action being attracted back towards a flat Kijun-sen. So let's be aware that we could see this market rally because of that attempt to find equilibrium. We also have a bearish market in the short-term time frame, and we saw the bearish breakout a couple of weeks ago. Solid bearish breakout, the market testing to the Tenkan-sen and finding resistance, and then the sellers coming back into the market strongly. So that area around the Tenkan-sen, if we do rally, will hold as very strong resistance to this market. Now, that area coincides at the moment with the round number 1300, so I suggest that if we do see buyers come back into this market, this area around 1300 and just above where we have the Kijun-sen trading to around 1306 will act as very, very strong resistance for this market, and the buyers will have to be very strong to break out above that area. Now, if we do have a possible scenario of the buyers coming back in and trading to that level in line with the market trading down below the cloud, we would then see the sellers come back in and trade the market back down to lower levels. But remembering that we do have fairly strong resistance close by this 1300 level, but fairly strong support extending down to around 1250. Now, looking at the Chikou span, we have had a change of sentiment in terms of the Chikou span trading below the current price action, and we have seen that now for the past 3 trading days, and that's reflected in these very solid black body candles that we're seeing. And it suggests that momentum here is now with the sellers and supporting the negativity that we're seeing in all 3 timeframes with the Ichimoku indicators. And it is suggesting that with this bearish close down below 1266, there is a likelihood that the market will test down to 1250. So we need to be patient and watch this 1266 level very closely. Watch the area around the 1260 level, 1259, for a potential test down to 1250. If the market does attempt to rally, there may be some minor resistance around the 1280 level. It was an area where we saw buyers coming in, and down around here for these previous two candles the market bounced off that area, but it will only be a minor level. But the sellers are very strongly in control in all three timeframes, and a test down to 1250 wouldn't surprise.